Hi, welcome to Market Alert for Tuesday, the 7th of April 2020. So yesterday we see gold soars to 8-year highs as stocks melt up on massive short squeeze. And obviously what they mean by a short squeeze is people that were short having to get out of their positions as the plunge protection team, the Fed and anybody else drives the market back to the upside. The market's completely decoupled from reality, as we will see as we go further into the market alert. So let's go back to Sunday night when the markets opened, and you can see here that prices opened, they gapped below the 200 MA, they were on the DP level and they moved higher, and that was it. That was it for the rest of the pre-market session. The market pulled back a bit, and then we got into the main event yesterday afternoon, which you can see there at 2:30. The market moved lower. We got a convergence of the MAs there, and then the market just moved higher, and they drove it and drove it and drove it. And until 10 minutes to 9, it was absolutely fascinating. I was sitting watching, and all of a sudden a massive bar there of 100, 200, 250, nearly 300 points over 10 minutes. It was unbelievable. What the reason behind that was, I have no idea. I couldn't find anything. It was just a case that they got the opportunity to drive the market higher, so they did. And then overnight we can see that prices have opened. They've moved a bit lower. Well, it's here. Sorry, that's the tail end before the market's closed. The market's open here. Prices have moved higher up to yesterday's high, and then they've made their way back down at the moment. Now the market's really quiet this week. There's no news until Thursday, when we get the claims, the unemployment claims, which is this one here. And the forecast for this week, although we'll look at it in more detail as we get closer to the day, it's still another 5 million jobs. And we can see already what the impact has been. Well, given the fact that they were out on both these forecasts, I would imagine that this is going to be far higher as well, because according to different articles I read over the weekend, a lot of people who had put claims in hadn't been counted for last week. So you can see that the forecasts there have been out when the actuals have been released. But that's on Thursday. That's the only thing that we've got. We're going into the Easter weekend, and of course, it's better to you can enjoy your Easter egg a lot more if you haven't got indigestion and the markets are collapsing. So don't be surprised to see the markets being moved to the upside during this week, or to be fairly quiet and sideways after yesterday's amazing feat of taking out both the 5-bar moving average, the 20-bar moving average, 76% retracement, which I'll draw in for you in a second, and trading back up to this high here, which is also a 50% retracement that we had marked up from this high down to this low. So some serious resistance in this area here for the Dow. So I'm just going to remove this one, and what I did here was get the retracement tool. This is the high down to this low, and I'm just going to delete a few of these other lines here. You can see the market went through the 38, the 50, the 62, and when it got to the 76% retracement, the market did struggle for a while, and then by the end of the evening, and I think that was the reason, was to ramp the market up to the high that we see here, this one at 22,623, and that was the reason behind this move here. Get and take that high out. But the resistance at 22.76, 076, you can see was around here, and the market had to breathe, came back. In fact, let me just draw that one in for you. We'll put it in as a garish green, I think, just to show where it is. And it was 22.06 if I recall. So let's have a look. 22. Let me just double check that figure. So that's right, it's 22,179. I thought it was a bit odd. 22,179. It must have been another market that I was trading yesterday. 22,179. So I'll bring it down here. There you go. And it was first part of the session. You can see there the market being brought up to it, then retracing, and then eventually breaking through here. And then it became a support, and the market then continued to move higher. So that's what we're seeing there in the daily chart. But like I say, the market will be waiting for this figure this week. That's the only real news. We've got the monetary policy meeting minutes accounts from the ECB, and what a mess that is as well. But that can wait for another market alert. But like I say, go forward this week, there's no reason why they can't move it higher, because they're certainly not going to want a sell-off going into the weekend. The implied volatility is also pointing to this as well. Again, down on Monday from Friday, from 49 down to 42. So more than a 50% retracement there, which is consistent with prices being fairly sideways to higher as well, and also turning green in the implied visual chart as well, which is basically that the implied is below the green line average, 20 bar moving average, and prices are back above the 20 bar moving average, and that's what you will see throughout these charts. If you go back and look at the other market alerts, you will see this picture before the carnage. Go back before and have a look, and you'll see the chart looks obviously scaled differently, and also a nice pattern of predictability with the implied volatility there. Okay, that will do for this one. Let's see what happens today. And if you like the content that you've seen here, then please feel free to subscribe, comment, and like. It'd be very much appreciated. But other than that, as ever, thanks for watching. See you in the next one.